Hello and good weekend. It's Adil Fazal, market analyst for CFDs.com, a leading spread betting and CFD brokerage. Be sure to visit the website www.cfds.com to learn more about their products and services. Also, the educational website of which this video is going to go and be available on. Obviously, my charts, etc., and analysis and insight on markets, formations, etc., support, resistance. All TA and FA stuff basically is certainly uploaded and is available at this website www.cfds.education. Okay, right, weekend analysis of the FTSE 100. Let's start. Let's begin. Okay, so basically the overwhelming theme this week has been obviously the rally that's ensued post NFP, or should we say post NFP to a large extent, but obviously the anticipation, the expectation that the Fed is going to obviously pause in terms of hiking rates, etc. So that's been the overwhelming theme, and that's obviously led to the dollar index collapsing. So if I bring up a chart of the dollar index, bear with me. There we go. So if you bring up a 60-minute chart, you can see it pretty clearly and evidently that the dollar index obviously has found weakness, and the HNS formation obviously has triggered and continues its sell-off. Now, my interpretation, and I did finish with 108 points for the week. I was up almost at 200 at one time, but I actually finished with 100 points. And the reason why I actually lost 100 points towards the end was because my interpretation of the FOMC minutes was the fact that the Fed was still going to go ahead and hike rates this year. Okay, they may delay it for a month or two. We're already in October. 2 months left. They may well hike in December or early next year. Either way, the hike is going to occur. Okay, I don't think the central bankers or Miss Yellen is going to renege or retract in any way at all. To a large extent, even though they are trying to attempt to buy some time by obviously highlighting the emerging market concerns and China concerns, etc. Obviously, given this Volkswagen debacle that obviously occurred recently and the cause of markets to sell off and go into a tailspin, obviously they want to buy some time, and they are going to go ahead and hike rates because it was a mistake that they didn't do it in March. So how the markets interpreted that as being bullish and actually started to buy equities in the markets, as you can see with regards to the S&P 500, it's been absolutely impressive rally. I mean, from 1880 pivot low, 1870 pivot low, we've had one hell of a rally. I mean, it's been 140 points and counting so far. So very, very impressive thus far. But we are into turbulence. We are into resistance on the S&P 500 now. You can clearly see that on the weekly chart as well. We're back into that resistance zone and that pivot top high. And given the fact that we're between that 50 to 61% retracement, this is a lower high. It may well be a short-term oversold bounce post Volkswagen, post Brexit, okay, post China. And given the fact that China was off for the majority of the week as well, it's certainly circumspect. So we'll have to see whether or not this obviously transpires or well, not transpires, it has to a large extent, but whether it can continue. If it does break above this pivot high at 2020, then obviously we are going back into resistance at 2040 on the S&P, and that will take global markets with it too. So again, that's something to digest to going into next week. Okay, so fundamentals, the data on Friday in terms of the FTSE was definitely weak. We had construction data coming out at minus 5.2%. We had the IMF coming concerning, basically highlighting concerns with regards to emerging markets, and that's not exactly bullish for the FTSE 100. Now the dollar index is actually into support, given the fact that we basically have factored in the dovish, any dovish expectations or any dovish interpretation thus far. From my perspective, it isn't dovish. It's just biding time for the inevitable, and the rate hike is certainly coming. And if the markets have sold off on this rate hike fear, then I don't see what the solution is in terms of buying the markets at this current juncture for a few months. Okay, so if you are a long-term or a value investor, and your thesis is that the markets are going to, or central banks are going to remain dovish forever, and therefore you want to buy this dip, and obviously you're looking for a rally, or you're looking for an increase in value in the asset prices, as we can see commodities have, that's not really going to last from my perspective if Miss Yellen is going to go ahead and hike rates. Obviously, if you believe that she's not going to hike, then yes, it is a very good buy. Okay, in terms of dollar index has sold off quite substantially. The H&S formation has completed, and we are now coming into support on the dollar index, and that in turn means that we are coming into resistance for commodities. Okay, now if we go to look at our commodity such as copper, for example, okay, you can see that we did put in a lower high. We tested the triple top here at 243, and we obviously failed to propel higher. As you can see, we have a bearish engulfing candle, and you do have a bear flag formation on copper. Daily chart, you can see we have put in a slight topping tail. If the market was that bullish, if there was growth in this market, then surely with the equity market going higher, we'd see copper even higher. That isn't the case, okay? That is not the case at present. So this market rally at present is definitely circumspect. Okay, so in terms of oil itself has put in a potential double top here now. We had a topping tail and a spike intraday, and the markets did actually give back. And again, 60-minute chart, although we are making higher highs and higher lows, yet it needs to be tested, and we shall see how it transpires next week. Now, we do have a H&S formation on the 10-minute chart. Okay, and that's what we are certainly looking for in terms of a potential move lower. So that's something that we need to keep an eye out for. Now, the chart that I was looking at was the chart of zinc, which led the rally on Friday. I mean, Glencore and zinc are two charts that certainly need to be shared in order for you to grasp the reason why the markets rallied and the FTSE rallied as well. So let me just bring up a chart of Glencore, because obviously it's in the news and it's obviously affecting sentiment, or dictating sentiment to a large extent. So let me just bring that up for you. Also, I need to bring up a chart of zinc as well, because zinc certainly rallied 10% or more based on the fact that Glencore was cutting production, and that certainly helped its share price. So that's certainly one idea out there. If you are a commodities producer, certainly cut back on production in order to get your share price higher. Okay, so zinc had quite a tremendous rally, as you can see here, which is quite evident, and we are now into resistance, putting in a potential resistance zone for zinc itself. So I'll certainly keep that now in part of my videos. So let me just click on File, Save, keep an eye on copper and zinc. So commodities have become very, very interesting now in terms of assessing the health of the emerging markets. Now, talking about emerging markets, let me just add that in for you as well. Chart of EEM. Bear with me. Emerging markets index. Here we go. This is an ETF. Okie dokie. So weekly chart of the emerging market index is right before you. Now let me get rid of these pivot points. Okay. Click on template. Click on save. File. Save. Okay. Understood. Okay. So the weekly chart of emerging markets, quite a thrust higher, quite an impressive thrust higher, to be honest. And we did actually finish weak on the day as well. So early sign of exhaustion on emerging markets, and this rally itself certainly seems to have run its due course. We have left some unfilled gaps behind, so downside gaps on emerging markets, and certainly remains vulnerable from my perspective. Okay, so again, watch out for the move in emerging markets and whether or not this rally can be sustained. Given the fact that German data last week was weak, and given the fact that we have had weaker UK data, IMF warning in terms of emerging markets and the global growth concerns, etc., and the German growth downgraded, French growth downgraded, UK growth downgraded, and obviously US growth downgraded too. So certainly does not post a positive picture in terms of the long run. I don't see why you would want to buy based on the fact that the US has obviously completed QE1, QE2, QE3. Tapering is done, and now they're raising rates. It's going to be very hard to justify buying, especially when there's lack of growth. I mean, if growth was certainly entrenched and embedded, and it was certainly increasing, then one would certainly argue, yes, you are buying as a value investor, and you are buying in terms of you're front running that growth. But if you're buying based on the fact that you expect the Fed to remain easy or remain dovish, then certainly need to question your thought process, from my understanding. Either way, that's the market, folks. I mean, one individual is right, the next individual is wrong, and it's all about money transfer. Okay, so emerging markets certainly showing some exhaustion, or showing a red candle ever since it's thrust higher. Quite a impressive red candle as well, so quite an impressive reversal. Looking at the chart of oil, as you can see, I've shown you in terms of resistance. The other two charts I'd like to show you are Aussie and Kiwi. Given the fact that the Aussie and Kiwi are very important in terms of assessing the health of commodities or assessing risk themselves, or are good risk barometers as such. So I'll just show you the chart of the Aussie. If you take the pivot high, take it to the pivot low, we're back into that fib 75% resistance, okay, on the Aussie. So you can certainly see we had quite a thrust higher, and the market is certainly due a correction on the Aussie itself, especially given the fact that the dollar index is obviously into support, and that would add weight to the argument that the FTSE itself is topping out. You can see on the 10-minute chart on the Kiwi, you can see we have a H&S formation. The daily chart, you can see that we are into that gap fill horizontal resistance on the Kiwi, and therefore you are looking at potential dollar support, which in turn obviously equals weaker commodities. The other index that I'd like to include here as well is CRBQ, so let me just add that in as well in terms of the commodities. Okie dokie, go to the daily chart here. Okay, so again we have run our course, and quite a substantial rally has been sold thus far. Okay, so quite a substantial rally in terms of commodities at present. You are into this gap fill resistance here, so we are certainly approaching resistance turbulence on the chart of the commodities index. Take the pivot high, take the pivot low here, and you are into that fib 75% resistance as well, and this whole move lower. So this is something certainly you need to observe, and we do have unfilled gaps below on the commodity index as well that needs to be filled. So it's all about the dollar index into support, commodities into resistance, and therefore you are looking for a potential flush lower on the FTSE 100 going into next week. That's my interpretation thus far. Let me just save that as well for future reference. Okay, the Aussie and Kiwi I've shown you as well in terms, and I've also shown you with regards to Glencore. I do need to show this chart actually. So looking at a daily chart of Glencore, you can see that we've put a topping tail on Friday. You are looking at a potential reversal here on Glencore. Let me just get rid of the pivot points. Okay, so very, very important in terms of Glencore. You do have the inverted head and shoulders complete as well on the 60-minute chart. So if I just show you that, you got a 140 target level, and that's exactly what we've hit, and we are looking for a reversal. So therefore you're looking at a 10-minute chart, and you can clearly see that we do have this H&S formation on Glencore as well. Okay, so again, this is something that we're going to keep an eye out for in terms of Monday's trading. So you have your left shoulder obviously here, you're looking at this potential topping tail, and then obviously the markets are expected to go lower on Glencore, and you'll have an unfilled gap below, and therefore a stronger argument for it to flush. Okay, in terms of commodities, the banking sector potential double top. Daily chart, you can see that we are into that horizontal resistance zone here, and we are holding thus far. The 60-minute chart, the banking sector obviously shows you this double top potential. H&S was negated, so therefore the banking sector is into resistance, and you are looking at a potential flush lower. The telecoms on the FTSE 100, again, it's a bearish engulfing candle, and we are consolidating within that red candle, and therefore it's a risk-off scenario. Looking at the retail sector, it already has put in a potential double top, a bearish engulfing candle, a doji as well on Friday, and therefore showing or looking to expect weakness coming to Monday. The mining sector, again, previous support equals resistance, and therefore the mining sector is certainly into resistance. The oil and gas sector, given the fact that oil has potentially put in a double top, oil and gas sector did put in a topping tail on Friday, and you are looking for a potential reversal as we approach resistance. So again, all the analysis that I've put forth from in terms of the commodities markets, the FX markets, indices, okay, certainly are looking for a potential reversal. Now in terms of bond market, the bond market certainly has reacted or is reacting to Mr. Carney's statements. The fact that Mr. Carney stated that he is not dependent upon China or emerging markets to a large extent, that is irrelevant to him. Also the Fed is the US central bank is irrelevant to him, and he will go ahead and raise interest rates. He did talk about wage pressures, so therefore that is considered to be hawkish. Okay, wage pressures rising, therefore that's hawkish, and therefore that the markets will interpret that as the interest rates potentially going to rise. So that's very, very important. Now let's look at the chart of sterling whilst we're observing this. Okay, GBP USD. So looking at a daily chart here, you do have a consolidation or resistance in this zone. Okay, so no real massive sell-off in terms of sterling. We have had quite a stellar rally as of late, and that obviously is interpreted as being negative for sterling itself. So negative for the equity market to a large extent. Okay, and that's why we have the FTSE 250 potentially into resistance given the recent rally in sterling as well. So looking at a daily chart from a technical perspective now, looking at the FTSE 250, you can see that we are into horizontal resistance and holding. Looking at the FTSE Europe, you can see that we are into that potential resistance zone now and are holding for now. You have the Euro top, FTSE Euro 100. And you certainly are in the resistance zone again, potential topping tail on Friday. FTSE All Share again, previous support equals resistance. Okay, the volatility index of the FTSE 100 again has held or potentially paced the 200 MA, is certainly into support for now. Okay, understood. So previous resistance equals support for the FTSE volatility index, and therefore indicating the FTSE 100 is actually obviously into resistance. Now looking at the FTSE 100 chart itself, let's start with the weekly chart of the FTSE 100. Previous resistance equals support. This is your key line in the sand on the FTSE itself, and therefore we did close below, which is a 6430 level, and therefore my bias remains bearish based on that aspect or potential scenario. So looking at the FTSE 100 on a daily chart, you have previous resistance or previous support equals resistance into that fib 61 to 75% resistance, and therefore looking for a push lower. If these two resistance zones break, and that will only happen if zinc, copper, oil, etc. make a new high and good dollar makes a new low, and we get further hawk, or should we say dovish talk from Mr. Carney, and we get stronger economic data that propels this market higher than this level at 6600 certainly is a potential scenario. But for now, we are looking at resistance zones around the 6430 to 6500 zone. Okay, certainly looking for a potential reversal to retest this breakout level at 6250, and then we can decide whether or not the FTSE certainly will continue its move. 60-minute chart, the FTSE 100, we've broken out of this bullish channel, and we are looking to come back and retest the 6380 region. If that fails, then you are looking at 6350 and potentially below. Okay, 10-minute chart, the FTSE 100 clearly shows a H&S formation. That H&S formation has a target of 6341. The 200 MA is at 6365, so certainly watch out for that zone. You do have previous resistance equals support at 6370. If that fails, then you have the next bastion of support really is at 6310. Ideally, you do have some zones here, but they're not really potent. You do have previous resistance equals support as well, 6340. So that certainly looks like the likely scenario. So from 6370 down to 6340, there are numerous pockets of support, and that certainly needs to be observed as well. But going into Monday, you are looking at H&S formation in the FTSE 100, given the fact that oil prices are into resistance. As I've explained, the dollar is certainly into support, and given the weaker construction data that came out on Friday and global growth being weak as well, and given the fact that China is certainly back, and that's going to be an interesting scenario from that perspective too. Okay, I think that summed up the FTSE 100. Be sure to visit www.cfds.com for your trading needs. Fire me an email if you do open up a trading account with them. I'll see if I can obviously try and get you a special offer or a discount on the trading account in terms of the cashback offer. Alternatively, be sure to visit www.cfds.education for your trading needs. Okay, folks, I think that's a wrap. Goodbye now.